I thought I was reading it wrong. It was
Just
like
a wait what moment?
it was like 220 some million. Granted, a lot of that in stock. But I'm wondering, so he has a background in the web services side of the business, which was such a strong driver of growth now. But with this problems on the e-commerce side, is there any grumblings? Are you picking up any grumblings that, maybe Jeff Bezos should come back from space and that maybe, they need a stronger leader in that retail side of the business?
Nobody's crying loud enough that it's reaching my ears so far. I mean, I think this is definitely Andy Jassy's biggest challenge since sitting in this chair. And then the word we get from Amazon is that he's still asking just really hard questions of a lot of business. Certainly today he's asking a bunch of their core retail unit. What we're hearing at Amazon is this is giving Jassy a kind of an excuse to interrogate some of Amazon's assumptions, right? Like what are they planning on for e-commerce growth, and can they sustain that? So I don't think we've seen enough result of that, and certainly nobody seems to be calling for his head this morning, as far as I can tell.
Hey, Matt, I'm looking at the Bloomberg and looking at 3-year growth average numbers on the big product revenue segmentation when it comes to Amazon. I mean, online stores obviously the big bulk in terms of the overall revenues, but in terms of growth, it is AWS or those third-party sellers, at least over the last 3 years. Subscription services is too. When you look, especially at AWS, is that still the thing, the kind of shining holy grail when it comes to Amazon, and that's where a lot of growth can still come? It
really is, and that's so much of the bull case for the company, and by some estimates, it's half of their valuation or more today. Is just that AWS, a structurally more profitable business than retail, is going to keep growing, and they're going to keep expanding as more companies put their servers out of business and trust the cloud, right?
Yeah.
And I think you also got to note the advertising business. Amazon last quarter started to break out ads, and they're doing real well there too.
Yeah, it's interesting, too. Our Bloomberg Intelligence team putting that out, too, when it comes to when we're seeing some of the ad disappointments among some of the other companies, whether it was Google, right, specifically, saying that increasingly we're seeing Amazon take a bigger share of that. Hey, Matt Day, thank you so much. Technology reporter at Bloomberg News. We know Amazon among the top decliners in both the S&P and the NASDAQ on this Friday. All right, you are listening to Bloomberg Business Week. Carol Massar, Mike Regan joining me on this Friday. We'll be right back right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
This is Bloomberg Business Week. Carol Master joining me on this Friday. Mike Regan. Coronavirus cases in the U.S. little change as compared to the same time yesterday. 81.3 million. That's according to data collected by Johns Hopkins and Bloomberg. We're going to get our latest update with Dr. Ian Lustbader over at NYU Langone in just a moment. Right now, though, an update on the markets. Here's Charlie Powell.
Hi, thank you very much, and happy Friday to you both. We have got the Dow, the S&P, NASDAQ at or near session lows. A familiar refrain, just under 90 minutes to go until it's all over. Got to keep it locked into Bloomberg Radio and specifically Bloomberg Business Week to see how things shake out. Will it get any worse? Right now, equities extending losses sparked by earnings misses by major tech giants. Look at Amazon, down now 15.1%. Apple down 2.3%. Intel tumbling now by 6.4%. China's pledge to ramp up stimulus is restoring confidence in the world's second largest economy and driver of commodity demand. We're seeing oil right now down 0.5%, had been higher earlier on, but right now on this Friday, West Texas Intermediate crude 104.72 a barrel. Spot gold up 0.9%, 19.10 the ounce, while the 10-year down 14.30 seconds, 10-year yield 2.87%. Equities lower across the board, sea of red now with the S&P down 110, drop there of 2.6%. The Dow down 583, drop there of 1.7%. NASDAQ down 384, a decline there of 3%. One of the big questions emerging from the Russian invasion of Ukraine is how to stop exports of Russian energy. Ellen Wald is a senior fellow at the Atlantic Council, and she says an oil embargo against Russia will be difficult to enforce.
There are, first of all, so many different points that Russia is able to export oil. We've got pipelines, we've got multiple ports. In fact, we've got ports and pipeline systems that they share with other countries like Kazakhstan, and that would be very, very hard to police. So I think that what we're really talking about here is Europe is kind of embargoing itself against Russian oil, and that oil will go to other sources.
And speaking of oil, ExxonMobil and Chevron are pledging to ramp up shareholder returns as crude oil and natural gas prices surge to multi-year highs following Russia's invasion of Ukraine. Shares of both oil giants are lower right now. ExxonMobil down 1.4%, Chevron down by 2.6%. Briefly, Robinhood market shares trading lower as a lockdown-driven boom in retail trading continues to fade and a stock market sell-off squeezes out some clients. Robinhood down now by 2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, you know it's the best major industry group in the S&P 500?
Gotta be energy.
This year, yep, best performing, up 36%. All right, Charlie, thank you so much. So outside advisors to the U.S. FDA tentatively plan to meet in June to talk about COVID-19 vaccines for younger kids. We're talking about 5 years or under 5 years of age. The news coming one day after Moderna said it had applied for emergency authorization for its shot in young kids. So let's get a pandemic update on this Friday. Back with us, as he often is on a Friday, Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, on the phone in New York City, joining Mike Regan and myself. Ian, how are you?
Doing very well, Carol and Mike. Happy Friday. Hope you guys are doing well.
Yeah, it feels good. Feels good to be Friday. Yeah, we're loving it ahead of the weekend. It also does feel good to see that when it comes to the vaccine, we're finally getting to those little critters. How do you see it? And I'm always curious about what's involved in getting, use authorization, safe use authorization for younger kids.
So there are really a number of questions about COVID, as there have been over the past 2 years that we've been following this, and vaccines. In a very interesting article in the New York Times entitled Truth and Trust, the author, David Leonard, really talks about public health officials sending confusing messages about mass pest vaccines. And I think that's what we're seeing with the really pediatric and, essentially neonatal vaccines. And they do have to go through a vaccine committee that reviews the data. And they're taking a little bit of a pause to really review this. And I think we have to keep in mind a few things. One, these vaccines still are for the alpha virus, which is 2 years old. Omicron, both in kids and adults, is a relatively milder vaccine, over 30 mutations just in the spike protein alone. So I think their question is going to be, do we really need this? And what are the risks and what are the benefits? So Omicron is milder than Alpha, so do we really need to give Alpha shots? It's 2 shots to children really as young as 6 months old. The studies look from 6 months to 6 years. 2, most young people do better than old people anyway with the virus. And what really are both the short-term and long-term side effects? We know that the vaccines, in a small percent of patients, they can have myocarditis, neurologic problems, other problems. And do we really need to expose millions of kids to really save the lives potentially of maybe hundreds or perhaps 1,000 kids who have died, sadly? But that's really mainly from the Alpha virus, not from the Omicron. So anyway, they have to look at all of that data.
Right.
But the data is sort of questionable. The efficacy was fairly low at 51%.
You know, Doctor, those calculations that the FDA are doing that you're talking about, I feel like parents in this country are doing the same type of calculations. And I've noticed just anecdotally, you know, friends that I talk to who even have gotten the vaccine themselves and got the booster, there is a bit more reluctance to have their kids get the booster or to get the shot when it's available. Do you think the uptake on this Moderna vaccine, if it is approved for these young kids, will be pretty low as a result? And, you know, what does that mean for the virus going forward?
Mike, you're exactly right. That sort of hesitancy, I think, will be shared by a lot of people because they're seeing in adults that many people have either had COVID or have had 3 shots, and they still get Omicron, and they're going to wonder, like, if I even vaccinate my child, my neonate or young child, is it really going to do anything? And that's what we're seeing with questions about the 4th shot. Same question. How long does the protection last? Do we really need it for our kids? And what are potential side effects? So I do think, as you say, the uptake on this may not be as great as we think. I think it's good to offer to people. They can make their own decision. I think it's nice for some kids who may have immune compromise. Is it good for everyone? I think we have to wait and really review more data.
Yeah, I feel like anything that has to do with COVID, I feel like there's always a ton of questions.
It's never an easy answer, is it?
No. Ian, thank you so much. Listen, have a great weekend. Dr. Ian Lospater, Clinical Professor of Medicine at NYU Langone Medical Center, with us on the phone from New York City. The FDA, though, has said it is holding the dates of June 8th, June 21st, and June 22nd for potential meetings of its vaccines and related biological products advisory committee to talk about pediatric use of vaccines made by Moderna and also the partnership of Pfizer and BioNTech. So they're going to be, Mike, certainly looking into it. All right, let's get back to world and national news. For that, we head back to the nation's capital and Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The U.S. is making sure that Ukrainians can fend off Russian aggression. The Pentagon's John Kirby says new training is underway.
This new training effort in Germany and at other locations in Europe is in direct support of recent U.S. security assistance packages that are designed to help Ukraine win their battles today and build strength for tomorrow.
Kirby says 160 members of the Florida National Guard are helping with that training. He says at this point there are no plans for American trainers to actually enter Ukraine. The White House is considering forgiving at least $10,000 in student loans per borrower through executive action. That's what Bloomberg is hearing from people familiar with the matter. Some deficit hawks worry it could worsen the inflation, but advocates say it could give Democrats a boost in November. A grand jury that's been investigating former President Donald Trump is wrapping up its work, but chances appear to be fading that the former president will face any criminal charges.
Sources tell the New York Times Manhattan District Attorney Alvin Bragg stopped presenting evidence about the former president's business practices to the grand jurors weeks ago. Several witnesses have either not been asked to testify or haven't heard from the DA's office in months. And in recent weeks, sources say a prosecutor who once played a key role in the investigation has stopped focusing on a potential case against the former president. 2 senior prosecutors in the DA's office resigned earlier this year. Those who are left have stopped working in the war room that they once used to prepare their grand jury evidence in the Trump investigation. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital. Keeping an eye on shares of Berkshire Hathaway, just down about 1.8% in today's trade, but they're up about 9% so far this year in what has been, as you know, a volatile and difficult market environment. And coming up over the weekend, Warren Buffett and Berkshire Hathaway hosting its annual meeting. And I've been reading a lot, Mike, in general about the activist season, right? And the shareholder, right? All the meetings, the annual meetings by companies are being held, and the activists are kind of out there front and center. One interesting story I read was about how there are now a lot of activists out there that are like, stop it, companies. You don't have to be so woke, is how they're saying.
That's
right?
what the banks were hit with,
right?
The backlash to their quote-unquote woke hiring practices. But I think all those resolutions got less than 5% of the vote, so they just kind of were making some noise.
It's just a good story for us on the terminal.
Tilting at windmills a little bit, yeah.
Well, shareholders attending Buffett's first in-person Berkshire Hathaway meeting since 2019 will be greeted by a group of BNSF railroad workers who are protesting a lack of pay increases and safety issues. We're talking about the Brotherhood of Locomotive Engineers and Trainmen. They're using the gathering in Omaha, Nebraska to call out alleged labor and safety issues at Berkshire's BNSF and rival Union Pacific Corps. Union planning to gather and hand out flyers near the arena where billionaire Buffett will host his first non-virtual annual meeting since the start of the COVID-19 pandemic. I mean, everybody's kind of excited that he's going to be there.
Right. But you know what sticks out to me in the story? These workers haven't had a contract raise since the middle of 2019. If railroad workers start walking off the job in a strike in force, and I think there have been, Canadian Pacific, I think, had some issues with it. Talk about some supply chain problems then. That whole situation is potentially, a tinderbox if this escalates. So that's a good story to keep an eye on.
Well, and what's interesting, 2019, we're thinking about where inflation has gone. Right. In that time, we all talk about that. We're watching the wage increases, and in most cases, they're not keeping up with inflation. Right. And if they haven't had anything like that in almost 3 years?
3 years, yeah.
That's pretty remarkable. So something we'll be following over the weekend. All right, you're listening to Bloomberg Business Week. Carol Massar along with Mike Regan. We are Bloomberg Radio, and this is Bloomberg Business Week.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Frayed nerves on Wall Street just over an hour to go ahead of the closing bell. Techs tumble, and that is putting it mildly. Amazon right now down 15.7%. Apple is down 2.5%. Intel now lower by 6.5%. Equities extending losses sparked by earnings misses from technology giants. S&P down 119, lows of the day right now, down 2.8%. The Dow down 645, down by 1.9%. The Nasdaq Composite Index down 427, lower by 3.3%, bringing its loss for the year for Nasdaq to 20.4%. The Nasdaq 100 Index, full of big tech names, down 3.5%. 10-year yield 2.87%. Spot gold up 0.9%, 19.10 the ounce. West Texas Intermediate crude down 0.4%, 104.87 a barrel. A pair of new female directors at Home Depot are among 20 net new spots in S&P 500 boardrooms last month, helping women capture 31% of seats for the first time. Today, we're looking at Home Depot shares down by 2.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So in the new issue of Bloomberg Business Week magazine, it's already out on newsstands. It's online at Bloomberg.com, also businessweek.com, and of course on the Bloomberg terminal. It's a story by Josh Green that looks at Florida's Governor Ron DeSantis raising his profile while managing to not alienate former President Donald Trump, which is tricky, as we all know. That story from Bloomberg Business Week national correspondent Josh Green, who joins us on the phone in Washington, D.C. Josh, good to have you here with Mike Regan and myself. So tell us about what the Florida governor is up to, because he's been quite public as of late, especially when it comes to his spat with the Walt Disney Company.
Yeah, well, I'm really looking at DeSantis and the Disney fight in our new issue, because it's just odd to see a popular governor of a big state attack his state's most prominent employer. And yet that is what is happening in Florida, with DeSantis attacking the Walt Disney Company for statements and support it's put out for gay people, and for criticizing what Democrats call the Don't Say Gay law in Florida that DeSantis pushed and signed, that forbids teachers from teaching about gender to younger school kids. And it's turning into this big fight in politics, and people are kind of wondering what is going on. And basically, as I lay out in the new issue of Business Week, DeSantis is purposely picking this fight because it is something that chimes with what conservatives care about. It's about the culture wars, but he's also trying to do something very tricky for Republican presidential hopefuls, and that is to raise his own profile as a 2024 presidential prospect without pissing off the biggest guy in Republican politics, and that is Donald Trump.
You know, and first, Carol, full disclosure, as a father of 3 daughters, I don't know how much I've spent at Disney and on their products over the years, so let me just get that out of the way. But Josh, I think you make a good point in this column about how this is really something that kind of riles up the base and the real sort of vocal thought leaders, if you will, of the Republican Party. It's the type of thing that maybe makes sense in a primary season. But if DeSantis is to get the nomination, I'm curious what you think. You know, does being anti-Disney play nationally, or is it the type of thing where suddenly we'll see him make amends with Disney and be riding the teacups in a photo op and making friends with the LGBTQ community a little bit when he tries to move to the middle a little bit in a general election?
Yeah, well, what he's really doing, and he's been doing this since last fall, I wrote about him back then before Disney was in his crosshairs, is it's not so much that he's fighting against Disney, he's fighting against this broader notion of what he calls woke capitalism, the idea that businesses generally are spurning their shareholders and kind of subordinating themselves to activist liberals who want them to adopt a social agenda. And in fairness to DeSantis, that is not entirely untrue. Liberals have made a point of targeting Fortune 500 companies in states like Georgia, where they really don't have political power. We saw that last year with all the fights over Delta and Coca-Cola. Activists had pressured them to speak out against these voting restriction laws. Republicans had responded with a boycott. What DeSantis is doing, and essentially, is turning the table and starting a political fight with Disney because he wants to draw his attention to himself as someone combating this issue of woke capitalism, which is very popular with conservatives, and it serves his immediate political interest because it helps to raise his profile in the lead up to the 2024 Republican presidential primary.
And, you know, Josh, you follow this stuff a lot more closely than I do, but it seems to me that Donald Trump hasn't really staked out a position on Disney per se, and he never really seemed to show too much animosity, at least in his statements towards the LGBTQ community. Do you think he'll try to chase DeSantis on this issue, or how do you see him reacting to this?
You know, it's interesting. I'm not sure if he will or not. The reason DeSantis started this issue is because he needed something to raise his profile, and the problem he had is that most of the fights in Republican politics are cultural fights that revolve around Donald Trump. They're fights Donald Trump has started. They're fights that revolve around him. The big one that's roiling a lot of primary races, including the one I've written about in the Pennsylvania Senate race, is the question of whether or not Trump was the rightful winner of the election and had it stolen from him. DeSantis correctly recognizes that anytime he's got to sort of talk about Trump's issues, subordinate himself to Trump, it makes him look feckless. It doesn't make him look like a strong standalone candidate who can develop his own following. And so one reason he started this fight with Disney is that it's the kind of cultural grievance that Republicans have really learned to care a lot about in the era of Donald Trump. And yet, it isn't a fight that revolves around Trump or one that Trump is even particularly involved in. So I think we'll have to wait and see whether Trump or not decides to get involved in the Disney fight. But DeSantis has already won to an extent, at least in the political realm, by creating this spectacle that revolves around him, that's raised his profile, that's gotten conservatives excited, and that has nothing to do for the time being with Donald Trump.
Hey, Josh, what is the relationship between DeSantis and Donald Trump? It sounds like it's a little complicated.
Very frosty, yes. I mean, Trump expects people in the Republican Party, all politicians, to essentially bow down to him and genuflect. DeSantis in particular, because when DeSantis was first running for governor in the Republican primary, Trump endorsed him and frankly probably got him elected. I don't think DeSantis would be governor were it not for Donald Trump. But at the same time, DeSantis has ambitions of his own and recognizes that deferring to Trump is going to make it impossible for DeSantis to be the Republican nominee in 2024. And so he's refused to. Trump has noticed this. It's angered him quite a bit. He's complained privately to advisors that DeSantis is a loser, that he has a dull personality, and he's taken shots at DeSantis publicly for refusing to reveal, for instance, whether or not he's had a COVID booster shot. He doesn't like the fact that DeSantis has become popular on terms that don't put him as a secondary figure to Trump.
You know, Josh, another story that caught my eye this week was that the whole QAnon community has piled in on this Disney issue. Are we seeing the signs of that sort of fringe element of the right wing getting on board with DeSantis, or is that just...
Absolutely. Well, certainly they're being attracted to the fight that DeSantis has started. And to the extent that this fight raises DeSantis' profile, sucks in all the kind of activist, fringy wackos who drive so much of Republican politics these days, you'd have to think, not great for Disney, not great for teachers and kids and LGBTQ folks who are in the crosshairs here. But as far as DeSantis' own short-term political interests, it's really hard to see that hurting him.
Well, it's fascinating to see how this is playing out here. And of course, the midterms just really months away. Hey, Josh, excuse me. Thank you so much. Josh Green, he's national correspondent at Bloomberg Business Week. His story is featured in the new issue of Business Week magazine, available on newsstands on the Bloomberg and at Bloomberg.com/businessweek. So be sure to check it out. Coming up, we're going to head over to our TV colleagues, talk about the markets. We are seeing selling steepening in this last hour of trading. You're listening to Bloomberg Radio.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading day, the week, and the month. Romaine Bostick, Taylor Riggs, Katie Greifeld, I remembered it this time, in for Caroline Hyde. We're joined right now by our colleagues Carol Masser and Mike Regan. We together welcome our audiences across Bloomberg television, radio, as well as YouTube. That threw me for a loop. I got to start coming to these meetings. Nice to see you, Mike and Carol. Always lovely to see you as well. Unfortunately, not a lovely day here in the market. Looking at the NASDAQ composite down about 3.5% on the day. The S&P 500 down 2.8%.
Yeah, not a good day to be a U.S. equity, but not a bad day to be a Chinese equity that trades in the United States. I know I talk about it a lot, but again, we're seeing those Chinese companies that trade in the U.S. rallying another 5% in today's session. Folks, they are up about 12% in the past 3 days. Again, overnight out of China, saying they're going to do anything to make sure that the Chinese economy hits its growth targets. Yeah. And then once again, we know tech, which has been battered again over the last month, all of a sudden now Chinese top leaders coming to say we're going to support
technology.
I'm a little confused
right now. I was literally in the room, in the dressing room with Tim Stenovec like about an hour ago, and somehow he's disappeared, and Mike Regan has replaced him.
My favorite is when Tim takes partial days. How does that work
my head
on
is
television?
spinning right now. Mike, what do you got? Have you actually been watching the markets, Mike? What's going on?
Sort of, Romaine. I mean, I think, one story that's gotten lost in the shuffle of all the news this week is the chip makers. You start the week with Qualcomm coming out and having great earnings. Their shares are rallying. Demand looks great in the chip sector. Then you got Intel come out late in the week saying, wait, not so fast. It looks like bad demand for PC chips, especially. And I think it's an important story to follow, given how important the semiconductor space and has been to these supply chain hiccups we've seen, and kind of a mixed picture now. I think strong demand on the mobile side, not so much on the PC side.
What is not a mixed picture is some of the major averages here today. I have some good superlatives. We know that that's going to continue in the next 59 minutes. Still looking at the fourth straight week now of some of the weekly declines on the S&P, tech, big tech as well. Looking at some of the biggest monthly declines on the S&P since March of 2020, and tech having the worst monthly loss since October of 2008. Katie, that really puts some size and some scope into some of the broader major averages.
Yeah, and with that, Taylor, I mean, if you look at the sector level, every single sector in the S&P 500 is underwater today. Leading losses, you have consumer discretionary, think some of those social media names. Technology right there as well, I mean, down 3% or so. Materials, your relative haven today, but still down over 1%, Romaine.
Yeah, and of course, I mean, a lot of this is really the Amazon effect. Maybe not the effect they were looking for here. Great book, by the way. The share is down 15% here. Worst day we've seen for the company. Going back to 2006 here, it is the biggest drag on the NASDAQ 100. Of course, the biggest drag on the S&P as well. And, well, Apple not doing any favors either. It's the second biggest drag on both of those indices. Those shares down about 2.5%. Microsoft, NVIDIA, Intel, Alphabet, Comcast, Qualcomm, all lower here on the day. Some of the biggest detractors here from any sort of positivity. But if you are looking for positivity, I'll give you two here. Honeywell, they came out with earnings, and I'm just going to read exactly what they said. Airlines are flying more, and oil and gas companies are increasing investment. And that's a big benefit to Honeywell. Those shares higher by about 3%, and Roku shares also higher by more than 3% here on the day, on the back of a reiteration of their guidance going forward, suggesting that maybe the streaming space, at least in certain pockets, is doing okay.
I want to talk about the tech sector. Carol, and actually maybe Mike Regan has a comment to this as well. When you think about the NASDAQ 100, we've dipped below 13,000. But this is actually what analysts on the street are still thinking for the 12-month forward guidance. They're still looking, if you can see there, at about a 17,000 level. So the bright future, at least from the street, is still painting a very different picture than what we're getting today.
Yeah, Taylor, but obviously these macro headwinds can kind of take over steal the narrative from that bright future. So I think, it's all about the Fed next week and any signal we can get from them about how aggressive they're going to take rates, and whether those guys at Deutsche Bank that are saying 5% or 6% in the Fed funds rate are, crazy as some people think they are.
Well, I'm glad you took us there, Mike, because it is about the macro story and what the Fed does next week. We get that meeting. It kind of came up on us, it feels like, very quickly. So wondering, especially that batch of economic news that we got today, how does it all play out when the Fed meets? Well, Romaine, you actually caught up, I believe, with Larry Summers.
I did. We're tight.
Okay.
Yeah.
You go to barbecues and vacation together?
Maybe.
Carbone Beach.
Oh, maybe. Wow.
Yeah.
All right.
Well, let's
anyway,
know what he had to say.
All right. Well, here's what he had to say about being aggressive, the Fed. Check it out.
My guess would be that the Fed's going to need to go further. I think that in order to reduce inflation, you need to raise real interest rates above their neutral level. If we've got 3 or 4% inflation and the neutral real interest rate is, as the Fed believes, 0.5%, then you're going to have to be up in the 4.5, 5 range to get inflation meaningfully down.
And of course, that's Larry Summers, former U.S. Treasury Secretary and President Emeritus of the Harvard Kennedy School of Government. So he's been out talking this for a while.
He's been talking this, and this is going to air on Wall Street Week a little bit later tonight. And a shameless plug here, because it wasn't just him. I talked to Randall Krosner here, former Fed governor. He was also saying the Fed needs to be more aggressive. I'm going to be interviewing later tonight Bob Diamond and Afshana Besloff about this as well. And really, the sentiment across the board here is that not only is 50 basis point needed, but a continual 50-50-50, or maybe in some cases 75, depending on who you ask, is really in the cards right now if the Fed wants to catch up.
Well, it's interesting. I mean, you hear these big, bold calls for how aggressive the Fed needs to be. But I mean, if you talk to investors, you hear a lot of skepticism about whether they'll actually be able to be that aggressive. That, the Fed is essentially looking for an out to not raise rates as much as they might need to.
Why not?
I don't know. I mean, I've talked to some people, George Perks at Bespoke, for example. They don't want to sacrifice the labor market. I know that we've kind of shifted the focus onto inflation, but I mean you still have the
what's
US
a pay raise if your grocery bill goes up 8.5%?
Well, wait. How do we square this with the story that's on the Bloomberg, right? That we're finding that the CEOs in those earnings call that they're mentioning economic slowdown, Taylor, a lot more. I think it's up 180% from the previous reporting season. This is what's on executives' minds, the C-suite's mind. They are mentioning economic slowdown, recession. How do you square that with the pressure for the Fed to be so much more aggressive?
I think that's a great question. I think the recap of this quarterly earnings results, the quarterly season, has been the current earnings period has been decent, but there's been some concerns about some of the slower forward guidance for at least the next quarter, not even to mention sort of the second half of the year. And I think that's where a lot of the uncertainties come in for these CEOs.
And you have an Amazon that basically says we hired too many people and
Netflix,
built out too many warehouses.
And Twitter and Robinhood. Yeah. I mean, there's been
and if Amazon, a company that is pretty known for being pretty good in terms of managing their business, messed it up. What do you think about some of the other businesses that don't have the same kind of expertise that they do?
Which is the fear that the Fed overdoes it. All right, we've got more to come. Certainly when we take you beyond the bell, so in less than an hour's time, we'll be back on radio, TV, and YouTube. We will count you down to the close, wrapping up the week, the day, and of course the month of April.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Mike Regan. He is in for Tim Stenovic on this Friday. We're going to rejoin our TV colleagues, and we will count you down to the closing bell on what's been, Mike, a hectic week. And here we are. We're seeing some selling here in the close. We are wrapping up a month in terms of trading, but it's been, big companies and earnings this week.
Absolutely. And sort of from the technical level, we're getting back to near those lows of the year from that nasty correction we saw earlier in the year. A lot of people looking at that 4,000 level in the S&P 500 as sort of a danger zone. If we break support at that level, I think, kind of a no man's land type of situation, and really people wondering where the bottom of this correction will be after that.
I feel like that's been the debate and the conversation, right? Where's the top in yields? Where do they top out? Where do equities bottom out at this point? And just when we think we've got it, or when we get near those levels, that's when we see some kind of technical move.
Yeah, absolutely. And not seeing sort of the classical reaction in the bond market to a day like this, not seeing that safe haven bid as much as you would expect in the treasuries, which just kind of would feed on itself and perpetuate, the trends in both asset classes.
Meaning we're not seeing yields move lower, right, with all of this selling.
Right,
yeah, I think that's really important. And as an equity guy, guy. Markets guy, do you tend to follow what the bond market says? Just got about 10 seconds.
Oh, absolutely. Absolutely. I think the assumption is always that the bond market's a little bit smarter than the stock market.
Sorry, equity guys and gals. All right, let's get back to world and national news. Over to D.C. and Nancy Lyons. Hey, Nance.
Thanks, Carol. He wasn't hurt, but UN Secretary General Antonio Guterres was in Kyiv overnight when Russia launched missiles into the capital. Some fear Russian President Vladimir Putin is getting bolder and may not stop with Ukraine. Neighboring Moldova has been mentioned as a possible target, but Moldova's Foreign Minister Nico Popescu tells Bloomberg he's not concerned yet.
It's quite tense. We as a government are preparing for the full spectrum of threats and contingencies. At the same time, in our assessment, Moldova is not about to become an immediate or imminent target for hostile military action.
Moldova's Foreign Minister Popescu admits, though, they do feel less secure. Reformulated vaccines that address different COVID variants are being tested and considered in combination with the flu vaccine, possibly even as a nasal spray. Bloomberg's Irv Chapman has more on Dr. Anthony Fauci's discussion today at the National Press Club.
Dr. Fauci would not elaborate on the personal risk factors that caused him to beg off attending the White House Correspondents' Banquet. He was asked, what about taking a vacation in Europe?
If a person is vaccinated and doubly boosted, and when you're on a plane, even though it's not required, wear an N95 mask, be prudent, get tested before you go. I don't think that one should hesitate to go ahead and enjoy that vacation.
Dr. Fauci said COVID-19 might be brought under control in the United States, but not eliminated for reasons from the creation of variants to the anti-vax movement. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in D.C., Carol Masser, and Mike Regan. We're here at Bloomberg headquarters in New York City in our Bloomberg Interactive Brokers studio. In a moment, we're going to talk a little bit about educating financial professionals when it comes to crypto and blockchain for investors. In the meantime, if you pull up the top crypto menu on the Bloomberg, this story pops up. It's from Dow Jones Wall Street Journal and has to do with some news. Was it out yesterday or the day before? But Labor Department officials believe Fidelity Investments plan to allow investors to put Bitcoin in their 401k accounts risks the retirement security of Americans. This is coming from a senior administrator, I should say, at the Labor Department.
I think that little giggle when you said Bitcoin says it all. Who would have thought we'd live to the day where we'd be seeing Bitcoin in people's 401s?
Well, I love what the official says. This is Ali Kawar, Acting Assistant Secretary of the Employee Benefit Security Administration, did an interview with the Wall Street Journal, says we have grave concerns with what Fidelity has done. I mean, no doubt about it, like where we were 10 years ago about crypto and blockchain and Bitcoin, I think is a very different conversation today. And yet, I still feel there's so many questions and there's so much volatility.
Absolutely. And when you think of the 401k, I mean, these are traditionally engineered and designed to have just those kind of the safest sort of funds you can have, plain vanilla mutual funds, index funds, some bond funds. You can go to cash and money markets. To the ability to put your retirement savings in a 401k, which remember, is everybody. It's not really.
It's your pension.
And yeah, not
if you're
necessarily
lucky enough
sophisticated
to have it.
investors at all. I do think, it's a valid criticism, and I think it's something that's could potentially grow louder. I always go back to, I was lucky enough to interview Jack Bogle a bunch of times when he was alive.
Nice guy.
And I always look at the contrast between Fidelity, which is sort of full-on embraced crypto, and Vanguard, which is still not touching it with a barge pole. It's fascinating to watch.
And the only other thing I would say is that constantly you're hearing investors say, we want the same opportunity when it comes to private equity and all those things that you can produce some high alpha, right, when it comes to returns. And so maybe this falls into that bucket. But anyway, we're going to talk a little bit more about crypto in our weekly crypto segment. We're coming up to that in just a moment.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 43 minutes to go ahead of the closing bell. Where are those dip buyers? The Dow, the S&P, NASDAQ up the worst level of the day. Let's head right over to the first word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks are plunging today amid the weakness in Amazon and Intel. Dow's currently down 730 points. S&P's dropped 129, while the NASDAQ is off by 440 points. The U.S. 10-year yield at 2.88%. Gold is up 13. Oil is falling. And Bitcoin is down by 3.8%. Among the main 11 S&P sectors, all were in the red, led by losses in consumer discretionary. And leaders to the upside in the Dow, Honeywell and Merck, while Intel fell 6.6% after earnings and led to the downside. Also after earnings, Amazon fell as much as 16%. That's the most since 2007. In deal news, deal reporters said that NCR is seeing buyout interest. And wrapping things up, HSBC's top holder is said to support a push to break up the bank. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, thank you, Bill. Have a great weekend to hear live breaking news over your Bloomberg SQUAWK on your Bloomberg. And that's a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So Goldman Sachs offering its first ever lending facility backed by Bitcoin. It's a significant step for a major U.S. bank that accelerates Wall Street's embrace of crypto. Meantime, Mike and I just talking about the Journal, talking about the Labor Department and officials there believing Fidelity's plan to allow investors to put Bitcoin in their 401k accounts risks the retirement security of Americans. So much as always on a daily basis to talk about when it comes to crypto. In our weekly crypto segment, we welcome Rick Edelman. He's founder of DACFP. That's Digital Assets Council of Financial Professionals, which works with financial professionals when it comes to learning about blockchain and digital assets. Rick is with us on the phone in Virginia. Rick, nice to have you here. I do feel like every day we are flooded by people embracing the crypto world and people taking a step back and being more cautious about crypto. Tell us, first of all, your organization, what you are doing to educate the financial world when it comes to the crypto world.
Thanks for having me on, Carol. The challenge, of course, is that crypto is so new. Financial advisors don't know much more about it than everybody else. And that's not really good when clients come asking, what is Bitcoin? Should I invest? How do I invest? So we created DACFP 4 years ago to serve as the premier education resource. We're the only game in town, really, the only objective, independent. We're not product sponsored. We're not pushing products, et cetera. That gives a product agnostic level of education for financial advisors. We offer the certificate in blockchain and digital assets so that advisors get a deep dive, not only in understanding the tech, but in understanding how to build a portfolio, how to serve clients, how to explain all this to clients. And there's a huge amount of increased demand from advisors for this knowledge because their clients are asking like never before.
You know, Rick, it's been fascinating to watch this evolution of the attitudes towards crypto on Wall Street. You know, back from the days when Jamie Dimon was saying he would, basically fire anyone who traded crypto at JP Morgan to, dipping his toe, JP Morgan dipping their toe into the space. I'm wondering what the sort of mood is among those registered advisors that you're talking about. Are they skeptics? Are they warming up to the asset class? It's a lot for an RIA to wrap their head around when you've got complicated traditional markets to all of a sudden layer on top the digital markets and DeFi and everything else. Is there an embrace of the risk sort of tolerance among these advisors that you need to get into crypto?
There really is. According to the most recent surveys, nearly half of all financial advisors personally own Bitcoin, but only 15% are recommending it to clients, predominantly because their firms won't let them. And advisors are realizing that they've got their hands tied behind their back because clients want to engage, they want to invest, and if the firms won't let them, then the clients are going to go somewhere else. And that's costing the firm's assets and AUM. It's reducing their fee revenue, and it's helping them, frankly, lose credibility. As clients are saying, are you that antiquated? You're not able to help me with the newest asset class on the marketplace? So advisors are recognizing the value and importance of this. They cite as the number one reason for investing in Bitcoin the non-correlation. The fact that this is additive to a diversified portfolio and helps to improve returns while reducing risks. And advisors are big fans of portfolio diversification, and Bitcoin is just the latest way to help make that even better.
Right, right. Although, does that non-correlation really hold up all the time? It seems like, we see Bitcoin and Ethereum really trading as risky assets like stocks these days. But I guess one day the potential and the hope is that they'll be completely uncorrelated.
You're absolutely right. We're beginning to see over the past 6 months exactly what you said, and everybody is wondering, is this a temporary aberration or is this representative of a new long-term trend? Jury's out. We'll have to wait and see.
Well, how much of the education that you guys are doing is also, though, about the volatility of it and how investors need to be incredibly cautious? I mean, we talked about the Labor Department. They're not so comfortable with what Fidelity might be doing here and allowing investors to put Bitcoin in their 401k accounts. I mean, to be fair, Rick, there is still so much we're trying to figure out about the crypto world.
You're absolutely right about that, Carol. But you know what? In this particular case with Fidelity's 401k, the Department of Labor is dead wrong. Think about it. We know that the best way to invest is dollar cost averaging. Everybody is in agreement on that. You invest a little bit of money at a regular interval over many, many years. It smooths out the volatility. We also know that when you do it this way, you're not investing in a lump sum, and we want the most volatile investment we can find to take advantage of the price swings. That's what makes dollar cost averaging work. It wouldn't make any sense to dollar cost average into a bank account. So if Bitcoin is an incredibly volatile asset, it's ideal for dollar cost averaging, which is what you do automatically in a 401k with the tax deductibility, the tax deferral, and free employer match. What you're going to discover happening.
Hang on. Mike, I know Mike is dying to jump in.
Well, I get you, Rick, but I'm wondering, what is the responsible way to approach putting Bitcoin into a 401k? I mean, would you limit allocations? Would you have a big red flashing box come up and say, this is a risky asset, read all this first? Because this is unadvised money, right? Not the financial advisors you're talking about. Most people set their 401s on their own. How do you do that responsibly?
And just got about 30 seconds.
401k plans are increasingly engaging in financial education. To your exact point, I believe you're going to find employers using this as a recruitment tool, saying to workers they're trying to hire, come work for our company and we'll provide you Bitcoin in your 401k through our match. This is here to stay, and it's a sea change. Big advance for crypto.
I'm just going to say, younger generation is asking for flexibility right now and being able to work from home. I don't know if it's Bitcoin.
And I wonder if they'll be matching in Bitcoin. That'd be interesting.
All right, great conversation. Rick Edelman, founder of DAC-FP, joining us on the phone in Virginia. That's the Digital Assets Council of Financial Professionals. Coming up, folks, we're going to talk a little bit about what's going on with Apple. That stock under some pressure. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so we talked about Amazon, and certainly that stock is under a ton of pressure in today's session. Also seeing some selling shares of Apple. We're going to dig a little bit deeper into that story in just a moment. First up, though, back to the overall market trade and Charlie Pellet.
All right, thank you very much. An interesting session because every update so far today, things have gotten worse from the previous update. That is certainly true right now. 28 minutes to go. We've got the Dow, the S&P, NASDAQ, all declining right to the numbers. We'll give you the why and some color. Also, we'll get to those tech earnings. S&P down 135 points right now, a drop of 3.2%. The Dow lower by 776 points, drop there of 2.3%. NASDAQ down 463, a decline right now of 3.6%. 10 years down 17 seconds, 10-year yield 2.88%. Gold is little changed, higher now by about $6 the ounce to $19.01, up by 0.4%. West Texas Intermediate crude now down 1.2%, 104.07 a barrel. NASDAQ 100 index down now by 3.8% at 12,952, lower by 500 points on the NASDAQ 100 index. Tech stocks extending losses as shares of what were once market darlings at the height of the pandemic head for their worst monthly drop since the great financial crisis. Well, as for those tech earnings, Emily Rowland is Co-Chief Investment Officer at JH Investments.
We've been on a roller coaster ride in terms of tech earnings, and we think really what's happening here is we're moving away from this period in which a rising tide lifted all boats. We no longer have ultra-accommodative Fed policy. We no longer have fiscal stimulus and speculative risk-taking, and now we're getting to see what the fundamentals actually look like for technology firms.
And Amazon leading declines with a 14.7% drop right now, the worst since 2007, as the e-commerce giants build out during the pandemic proved to be too much amid waning consumer demand. Apple also reported earnings last night. Apple down 2.8%. Intel also joining the sell-off today. Intel reporting last night down now by 6.3%. We've got more on tech coming up in a moment. Again, recapping equities lower across the board. S&P down by 3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie. Charlie, of course, breaking down that train, of course, the selling that we're seeing in big tech, including Apple, which is down about 3% as we speak, so pretty much at its lows of the day with the really tracking the overall market. This is following earnings last night when the company predicted that supply constraints could cost $4 to $8 billion in revenue during the current quarter, a warning that really cast a pall on record-setting results that the company had reported. Let's get into Apple's business and outlook. Back with us is Tom Giles. He's Bloomberg Technology Executive Editor, joining Mike Regan and me. Tom is out there in San Francisco. So, it was interesting to watch as it came across, because initially we saw shares of Apple rally last night, Tom, but as they got deeper into the release and then, of course, the call, it started to freak everybody. Okay. We have a little technical problem, but we'll hopefully get to Tom in just a moment. But what was interesting, Mike, is that when the report came out after the closing bell, we had Amazon crossing, we had Apple, we had Intel. It was such a big tech, deluge of earnings. Amazon was down, dropped like a rock right after the release. Apple actually had rallied initially.
It's it. And, it's amazing. If you want to sort of in a nutshell encapsulate what an ugly market it is today, Apple also announced a $90 billion addition to their share buyback plan. They raised
Which is what they do, right?
They raised their dividend, but, and to still see them just get caught up in this downdraft of such an ugly market. So I'm not so sure this is as nasty of a report for Apple as the stock price maybe suggests. I think they're just kind of getting thrown out the baby with the bathwater type of scenario today.
Let's see what Tom Giles has to say, Executive Editor of Bloomberg Technology, on the phone from San Francisco. We've got him. Hey, Tom, do you, based on your understanding of this company, seeing the report, seeing, investor analyst reaction, investors putting the stock down about to its lows today of down about 3%. Are they overdoing it?
Yep.
Okay.
Well, I think it's really easy to make contrast to the other big elephant in the room, right, which is Amazon, which really had bad news. I think the difference here with Apple is
they gave some parameters to it. They talked about how this is about a lockdown that's happening in China, and they put some parameters around it in terms of 4 billion to 8 billion. That's a pretty wide range, but they put some definite parameters around it. It's going to cost revenue of that amount in the quarter. But ultimately there's still demand for the iPhone. Tim Cook talked about how, demand might be affected a little bit in China, but overall around the world, demand for our main products remains robust. That's the important takeaway here. Lockdowns don't get me wrong, lockdowns are a big deal. They affect the supply chain. They affect your ability for workers to get out of their homes into factories to make these devices. They affect the ability for workers to transport parts and completed products to warehouses and from warehouses, et cetera. They screw things up in a really fundamental way. I don't want to make light of it.
Mm-hmm. Hey, Tom, it's Mike.
Lockdowns aren't forever.
Hey, Tom, it's Mike Regan. Looking at sort of the various business lines of Apple this quarter, services obviously was very strong. Hey, they won an Oscar. That's pretty cool for their film division. But, you look at some of the sort of other hardware. Mac sales were strong. iPad, the watch, pretty lackluster. And I'm just wondering, where does the growth come going forward from Apple in that core hardware department? For years we talked about, well, maybe they'd get into electric cars, maybe TVs. Is there any sort of new shiny gadget on the horizon that Apple can sort of pin its hopes of growth onto?
Well, they definitely talk about AR. We haven't heard as much about that recently. And if they do get into AR, they're going to run into competition with this other big $1 trillion company called Meta, which is also putting a lot of its future on that side of things. In cars, they've had a lot of speed bumps, pun intended. And I think that's an area that we want to keep an eye on. Don't know what it's going to look like. Services is really important. That's an area. But in terms of like a new form factor, some new gadget, that is the multi-billion dollar question. Doesn't sound like cars is going to happen immediately. TVs, right? We remember when we were talking about Apple TV as a big thing, has fallen by the wayside. Services is really an area of growth for them. Accessories is really an area of growth. And they're going to continue to work the iPhone for as long as humanly possible. And the iPhone is still a strong device for them.
Yeah, remember, Tom, when everybody's saying, the iPhone isn't enough, we need something more from Apple? And that was years ago, and it's still, churning them out and making it.
I remember typing that on my iPhone in a tweet, I think. Yeah.
How many iPhones later, how many have I owned and added on to the mix of Apple products in our home? Tom Giles, thanks so much. Have a great weekend. He's executive editor at Bloomberg Technology on the phone from San Francisco, but we are seeing, nonetheless, some selling in shares of Apple. All right, we got to head back over to D.C. Nancy Lyons and World of National News. Nance.
Thanks, Carol. The EPA is following through on the Biden administration's pledge to use emergency action to allow access to E15 gasoline, which is a blend of gasoline and 15% ethanol. White House Press Secretary Jen Psaki says it'll help families better deal with higher prices at the pump.
At current prices, E15 can save a family 10 cents per gallon of gas on average, and many stores sell E15 at an even greater discount. There's just over 2,000 gas stations, mostly in the Midwest, where without this action, the E15 tank pump would be covered and Americans wouldn't be able to access it.
The waiver will go into effect May 1st and last 20 days. The U.S. is putting together another aid package for Ukraine, and retired Admiral James Stavridis says there are two things that Ukraine needs that are not yet on the way: longer-range anti-ship missiles and high-performance aircraft. Stavridis served as the NATO Supreme Commander in Europe. He tells Bloomberg Russia was not counting on NATO sticking together during this invasion.
Vladimir Putin needs to reap what he has sown, and the consequences of invading a democracy like Ukraine are going to be that other democracies like Sweden and Finland look at what happened to Ukraine and say, I think I would like a NATO membership card.
Retired Admiral James Stavridis. Today in England, three-time Wimbledon champion Boris Becker was sentenced to 2.5 years in prison. It's for deliberately ignoring the terms of his bankruptcy agreement. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, along with Mike Regan. My co-host Tim Stanovic is off today. We're in our interactive broker studio. Want to talk a little bit about Kathy Wood's flagship ARK Innovation Fund, her ETF, headed for its worst ever month as April goes from bad to worse for her. It is down. I just did a quick check. The HCPI function on the Bloomberg down about 28% this month.
Ouch.
Yeah.
You know, Carol, I have to give you a quick anecdote. Before
Please.
COVID, I actually was able to go to one of the ideas sessions at ARK. Kathy wasn't there, but she zoomed in from, I think she was somewhere tropical. And you'll be, your ears were burning because I think about half of the conversation was about Carol Massar.
Are you serious? From Kathy?
Well,
or-
they were talking about podcasts and whether you could sort of automate the advertising in podcasts and how, you know, typically advertisers like the host to read the ads. And she said, well, I don't, you know, if I'm listening to Carol Massar, I don't want to hear a robo Carol Massar read the ads.
Did she really say that? Well, you know, Kathy and I have a long history, and I know that there's a lot of debate about her strategy, but she did her first interview, which she reminded me, we're getting ready to go to Milken, and she reminded me last fall when she and I did a one-on-one at Milken, that I was her first interview, and her PR folks had reached out to our producer, Paul Brennan, and when she came in, she had like no assets, was just starting out, but this whole innovative, disruptive thing resonated with me. And this is when everybody didn't believe in Elon Musk and Tesla, which turned out to be a pretty good bet for her.
I think it's one of these cases of just getting too successful and just things getting carried away. You know, to plug my own podcast, What Goes Up, we had Efi DeVette of Moneta, the RIA, and she actually had just interviewed Kathy Wood.
Yeah.
And she just compared it all to the irrational exuberance of the .com cycle, which I think is exactly what happened. It's, you know, these are innovative companies. They do have a great future. People just got a little carried away.
And the runway can take a long time.
Yeah.
And the only thing I would say is that I feel like the establishment is now all creating their own kind of innovative funds to run after her. So I would never count her out, to be quite honest.
Me neither.
This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Worst level of the day, 13 minutes to go before the closing bell. The Dow now down 824 points, a drop right now of 2.4%. The S&P 500 index down 144, lower by 3.4%. Nasdaq down 496 points, down 3.9%. 10 years down 20-30 seconds, 10-year yield now 2.90%. On this final trading day of April, we have got spot gold up 0.2%, $18.98 the ounce, and West Texas Intermediate crude down 1.1%, $104.15 a barrel. Tech stocks extending losses, shares of what were once market darlings at the height of the pandemic on track for their worst monthly drop since the great financial crisis. Amazon, after last night's earnings report, down 15.1%. Apple, after earnings, down 3.4%. Intel, after earnings, down by 6.2%. So again, recapping, losses for U.S. equities with the S&P down 3.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
With Brazil's presidential election less than 6 months away, the state of the economy is the country's biggest priority. Unfortunately, neither incumbent Jair Bolsonaro nor his main rival, former President Luiz Inácio Lula da Silva, have shown signs they intend to prioritize the economic reforms the country needs to return to sustainable growth. Brazilians deserve better. With many voters still undecided, a third-way candidate with a credible economic record could conceivably seize the middle ground. After all, centrist parties have fared well in recent municipal elections. But so far, moderates have failed to unite behind a single presidential standard-bearer. Unless a viable alternative emerges soon, Brazilians will be left with a choice between two populists, neither likely to make the changes needed to unlock Brazil's potential. That would be a shame. This editorial was written by the Bloomberg Opinion Editorial Board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg Terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. About 10 minutes left to wrap up the Friday trading session, wrap up a wild week. We're seeing stocks selling into the close here. We're now down about 4% on the NASDAQ, more than 4%. You heard Charlie talk about it, 3.6% lower on the S&P, Dow off 2.7%. Katie Nixon is with us for the drive to the close, back with us, in fact. She's Chief Investment Officer at Northern Trust Wealth Management, on the phone from Rye, New York. So how many phone calls, Katie, Mike Regan and I want to know, how many calls are you getting from some of your clients?
You know, Carol, first of all, thank you for having me. But I would say we've prepared our clients for this kind of volatility. We've been anticipating that we would be in this period of uncertainty, and that would be reflected in lots of gyrations, both up and down, in markets and bond markets and in stock markets. And certainly that has come to bear. Just in the last week alone, we've had great upside and some painful downside as we see today. So we've kind of prepared folks for this. So we're not getting as many phone calls as you would think.
Katie, it's funny, months ago, I don't know, at the end of last year, early this year, people started sort of whispering that word stagflation. And immediately they'd be sort of hushed and someone else would say, no, there's no chance, the consumer's too strong, the economy's too strong, but then we see this negative GDP print for the first quarter this week. Is this what stagflation looks like, or is that report just a false signal, do you think?
Well, I think the data was pretty noisy. Honestly, for the first quarter, we had that big trade drag, and then we had consumption that did come in pretty good, a little bit light, but pretty good. So the data was, I wouldn't say conclusive in terms of one way or another, but I would say the rolling over of data. We're going to get a lot more data next week. Obviously, we're going to get the non-farm payroll, SM data. We'll hear from the Fed clearly. So we're going to get a lot of stuff coming at us next week. But I don't think that's our base case just yet. I think we're going to have to watch really carefully what happens, and certainly listening to some of the earnings announcements over the last couple of days also present, I would say, a little bit of a mixed story in terms of what the macro environment is.
How do you feel about big tech right now after this week and after last week?
Carol, it's such a great question. And, you were just reporting on what a tough day the NASDAQ is having. And clearly it's in bear market territory right now. And investors have just really run away from these high valuation stocks. I mean, I think valuation is very fragile in this rising rate environment here. And then at the same time, you've got some fundamentals that, at best are sort of flattening out and at worst are showing some declining trends. I mean, Netflix is sort of the poster child, joined now by Amazon. That's really showing a weakening of demand as those sort of stay-at-home stocks get kicked to the curb in favor of the stocks more into the reopening trade, the reopening trade, I guess I would say.
So let me just follow real quickly. Would you, though, see this? I mean, you're right, where the NASDAQ 100 from its top right now is down about 22%. Is that a buying opportunity?
Well, here's the thing which I think is really interesting is our outlook is that the economy is actually going to start slowing in the back half of 2022 and into 2023. And in a slowing economy, these are the kinds of stocks that actually tend to do well. They have sustainable growth models. They have great cash flow. They have fortress balance sheets. So we would really advise investors not to sort of have to pick sides here between the cyclicals and the growth stocks, but really have both in their portfolio, because there will come a day when investors prioritize growth and will pay more for growth in a slowing growth environment.
Katie, I know you've been keeping an eye on mortgage rates. I guess everyone has these days. In tandem with just higher shelter costs, this rip-roaring housing market, at least up till now. Are we setting ourselves up for a hard landing in housing, do you think? And if so, how does that play out? Is that part of your sort of thinking on why we'll see a slowdown in growth?
Well, I would say that's part of our thinking why we think inflation is probably going to continue to surprise on the upside, because housing costs, whether it's rents or home prices, we think are going to remain elevated. And the interesting thing is, despite the fact that certainly financing costs have gone up, I mean, the 30-year mortgage, fixed rate mortgage is up significantly in just a couple of months. There's still such strong fundamental demand for housing, and we have a supply problem. So that's going to continue to put upward pressure on housing prices, probably not at the pace that we have seen in 2021, but we certainly think housing price inflation is going to persist for a while until supply catches up with this really robust demand.
So what do you do if you've got some new money to put to work? Do you stick it in cash or cash-like investments at this point and just kind of ride this out?
You know what, Carol, this is going to be hard advice for a lot of folks to hear, but I would say get invested. I mean, we see the VIX so elevated here at over 30. We see prices down significantly. When you have those two things in tandem, these very sharp price declines coupled with heightened volatility, for long-term investors, it's typically a very good time to get invested. Now, clearly, though, it's always the hardest time to get invested because there's certainly fear, overwhelming greed at this point. But if you have a long enough time horizon, history would suggest this is a good time to get to your strategic allocation.
Yeah, talk about fear, overwhelming greed. I'm looking at the markets now. The Dow average down almost 1,000 points. Ouch.
Makes me wonder what Warren Buffett's going to say, right? Because this is when he would say, this is when you want to be buying.
This is
in
the
his meeting this weekend.
Buffett get greedy time. But Katie, also, I wonder, you pointed out that investor sentiment is at sort of historic lows. I think you're looking at one measure, lowest since 1992. That, to Carol's point about Buffett, that gets every contrarian's sort of spidey senses tingling, and, they want to jump in and be the hero. Is it that easy when sentiment's that bad, or is there,
or is sentiment right?
Yeah, right. How are you thinking about that?
It can always get worse. So we're never going to time the market perfectly at the bottom, but we can look back at history that shows us, generally speaking, these are good times for long-term investors. And very much, I'm glad you mentioned Warren Buffett, because, the consummate long-term investor would probably have that same advice. You want to be buying when everyone else is selling, running in when everyone else is running out, and certainly not just the sentiment. So not just words, but in deeds. Investors are just selling. Retail investors are selling stocks and bonds now here at really enormous levels.
All right, we're going to leave it there. So great, as always, to check in with you. Katie Nixon, she's Chief Investment Officer for the Wealth Management business over at Northern Trust, on the phone from Rye, New York. It's sticking with me that she's saying, as we're seeing selling into the close, it can always get worse.
Yeah, that's true. That's true.
But
Yeah.
history, like right over time, how many market cycles have you seen? We are way higher than where we were how many years ago? You know what I mean? 5 years ago, 10 years ago, 20 years ago. So just a little bit of a reminder. All right, folks, just a few minutes left in today's trading session, and we are definitely seeing selling accelerate into the close. Right now, the NASDAQ down 4.2%, Dow down about 3%, and the S&P down about 3.8%. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We are counting you down to the closing bell on this Friday, wrapping up the month of April.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Katie Greifeld in for Caroline Hyde. We're counting you down to the closing bell on this Friday afternoon, last trading day of April. We now go to our global simulcast with Carol Masser, Mike Regan in for Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And Carol, we came into this day knowing that we were headed for a down week and a down month, but those losses have deepened as we get closer to the closing bell.
Yeah, just look at these last few minutes. We're seeing the selling accelerate. I was just looking at a couple of indices. The NASDAQ 100, we are officially in a bear market. If you come from the top back in November of 2021, down 22%. And meantime, the VIX has really shot up about 4 points, almost to 34. So the volatility continuing. Our last guest, though, Katie Nixon over at Northern Trust, saying, I'm like, can it get worse? And she's like, it can always get worse. But typically, we look back at these times as a buying opportunity.
Things can always get worse, right? Well, on the print side, we always like the size and scope. How bad of a day is this today? And I'm looking at our function here. This is the worst day for the S&P 500 since June 11th of 2020. Worst day for the NASDAQ 100 since September 8th of 2020. Just a really ugly day, and just forget about yesterday's rally. We're back at those lows, and what a way to go into the week.
And Mike, some of the worst months that we've had since 2020 on the S&P, and the worst month since, I believe, October 2008 here, if you're looking at technology. And Katie, yet yields are climbing, and we are climbing 10 basis points across the curve. No sort of risk haven here for bond markets today in full faith and credit.
Well, that's the thing. Where is your haven? Even the dollar lower today.
All right, we're going to take our time and walk you through everything that happened today on the week and or in the month here. Let's start off with the Dow Jones Industrial Average. It's going to finish the day down roughly 940 points as we wait for these numbers to settle. That's about 2.7% lower here on the day. Believe it or not, overall, that's your relative outperformer on the day. The S&P 500 is going to finish the day down by about 156 points. There are only 14 stocks in that index that managed to finish in the green. Overall, it's down 3.6% here on the day. It's going to finish out the month down about 9%. The NASDAQ Composite down 537 points, or more than 4% here on the day, and now giving it a month-to-date decline of roughly 13%. The Russell 2000 also going to finish lower here, Carol, by about 2.8% here or so here, and on a monthly basis, it's down by about 10%.
I'm so glad you took us to a monthly basis, Romaine. I'm just pulling up the S&P 500, taking a look at the members and what has been the best performing stock in the S&P 500 over the past month. Twitter up almost 21%. The worst performing, what do you think it is, Romaine?
Netflix.
Nicely done, guys. Down about 51%.
You know, Carol, I want to bring some size and scope. I think Romaine smartly mentioned only about 14 members or so higher on the day. We're diving 2 levels down here for our radio audience, the sector winners, the sector losers. There is not even one sector winner today that is in the green. A lot of red. Let me walk you through this. The best performer, which is still down 1% on the day, was auto and auto components. That could be Tesla. Otherwise, very defensive. Consumer durables here. You get some pharmacy, household products, food and beverage, but those are still off 2.5%, as there are some concerns that even inflation can't hide out in any of these products. I want to go down to some of the worst losers, Carol, and it is getting really ugly here. We're looking at everything off about 4 to even 10%. The retailers are off 9.5%. Semiconductors, looking at Intel, for example, that sector off 4.9%. Software as well, really big tech off 4.5%. Really struggling here to look at anything that could be in the green.
Yeah, talk about struggles today. Check out shares of Amazon, pretty much just finishing at their lows of the session, down 14%. That's the biggest one-day drop since July of 2006. We've talked about a lot of superlatives today. Well, there's one for you. We know the story, right? We've been talking about it all day here at Bloomberg. Really concerns about the overspend, the overhiring during the pandemic, and now we're seeing e-commerce sales slow. VeriSign is another one I want to mention, down about 14%, a top decliner in the NASDAQ 100 and the S&P, dropping the most in 2 years. The company lowering the top end of its full-year outlook. And then to some of the gainers, folks, there were gainers. I mentioned Chinese stocks that trade here. Pinduoduo, that was up about 13.5% in today's session. This, again, as Chinese officials, Romaine, are talking about supporting now the tech sector, so they gain. Mohawk Industries, check it out. That one was also up about 8%. And this company giving some upbeat in terms of
you
its
want
forecast.
new floors. I guess that's going to be recession-proof maybe in there.
Well, it just shows renovations are continuing, right? And that kind of stuff is playing.
I do want to get to the idea here, though, of just how broad-based this sell-off was. I mean, officially now we had 96% of the S&P 500 lower on the day. Remember, on Tuesday we had a similar sell-off of roughly 94%. And last Friday we had a sell-off of about 97% of the members being down. And there's been a lot of talk by some of the strategists out there who basically saying that you need to see a string of these sort of 90% plus down days in order to really start worrying. That was the message when we had the one down day, the 90%. That was the message when we had two. Now this is number 3 in the span of about 6 trading sessions. And you have to wonder when you start to worry about the breadth of these types of sell-offs.
Yeah, I want to make Romaine's eyes roll a little bit by pointing out some of the things that the technical analysis would look at. We did set a new closing low for the S&P 500 today. Actually, we're the lowest since last May of 2021. S&P now down 14%.